Most people refinance for the wrong reasons, and sometimes it will cost them thousands of dollars. Let me show you why. One of the things that you're going to have to do as you're looking at this new market where rates went from 7% to now we're on the brink of getting into the mid fives, especially for those of you who financed your property, purchased your property back in 2023, 2024, and now you're looking at headlines and information marketing. Your loan officer calling you from then. Maybe your current servicer has reached out to you to tell you about the ability to lower your rate. And we really want to go through a scenario just to kind of illustrate why it's important to make sure you're doing the math the right way. I find that most borrowers get caught up in the emotion of saving money. Now, there definitely are some key points here to discuss through making this decision, because you can really easily get caught up in the emotion of it. Your loan officer, whether they're part of the servicing team for the company that you're currently making your payments to, or your old loan officer reaches out to you because you're still in their pipeline. So I really want to help get behind the scenes a little bit and help uncover the math versus the emotion. Because if you run purely off of emotion, which is how most of us make our decisions, right? We make our decisions based upon how something's going to make us feel. Just because the interest rate went from 7% down to 6% doesn't necessarily mean that it's the right time to refinance. Now, I'm not saying that you shouldn't, but I just want to make sure that you take the time to do the math, okay? So it all comes down to really a few key things. Number one, if you have a 30-year fixed mortgage and you're refinancing out of that 30-year fix and you're restarting over again, the 2 years that you've just paid on, that was mostly to interest. You're starting the clock over again. So right now I'm actually helping a borrower refinance, and they closed in April of 2024 at 7%. Their property is located in a market where prices are a little bit elevated, so they're in the loan amount range of the in the high 700s. So even a 0.5%, so 7 to 6.5, makes a significant impact on their payment. However, in all cases, generally, I'm really trying to establish a very equitable position for them, so they can go from at least a 7 down at minimum 1%. And in this case, we're going from a 7% down to a 5.625. So their payment savings is going to be closer to about $800 per month. Now, I went over multiple scenarios with them to make sure that they understood how the break-even point works, because so that's number one, making sure, because there's going to be closing costs involved in this transaction no matter what. There's a couple ways to mitigate those closing costs, but there's always going to be underwriting fees, potentially loan level price adjustments, which I'll get into a little bit later. And not only that, the title expenses and then the escrow account. So title, recording fees for the county. So there's going to be closing costs. Let's just put it that way. So number two is the starting the loan over again. Now, if you have a 30-year mortgage right now and you locked it in at 7% or somewhere between 6.5 and 7, maybe even 7.5, and you've been paying on that mortgage for a couple of years, I would encourage you to look at going from start, instead of doing a new 30-year, moving to a 28-year or even down to a 25-year. The pricing is going to be the same, because essentially what happens with, especially on a conventional loan, like a Fannie Mae or Freddie Mac loan, anywhere between 300 months, which is 25 years, and 360 months, which is 30 years, that window is the same pricing. So what we're doing with this particular borrower is we're not going to refinance into a 30, even though the payment savings would be shown to be even greater. The amount of interest that would be paid because they've already paid 2 years of interest, it would almost remove most of the benefit of refinancing. So we're actually doing a 28-year term. And it's really putting them in a position where they're saving a significant amount of interest because they're going from a 7% down to a 5.625, and they're not starting their term over again. So that's something to consider when you're looking at refinancing. Other things that can be a factor in this would be if you need to remove someone from the loan. You purchased it, like for another scenario that I'm running right now is I've got a father and a daughter. He was a co-signer for her while she's in school, and now she's graduated. It's been 2 years, and they want to remove her. So the biggest thing here is now it's going to be going from a primary residence for the daughter to an investment property. So the loan level pricing adjustments on this, before, if it's just a primary residence, they are zero. But now it's an investment property. Every conventional loan is going to have pricing adjustments or risk involved with a loan, and at the loan to value that they are at, it's 1.125% of the loan amount. So we've had to kind of work that into the equation based upon how long they're keeping the property for, and what the break-even point is of that. So then making sure that this is going to be an equitable. Should they just keep it as is? Should they just do a quit claim deed and remove her from just the title, or is a refinance the best choice? So we're working through that now. So these are just some things to think about. That these are kind of, I wouldn't call them hidden costs, but again, resetting amortization, hidden cost, paying interest for longer. Rolling costs into the loan. Like, those are all things that you're going to want to think about. Okay. So every situation is going to be different. If you want to run some numbers by me personally, I lend in all 50 states. My information is going to be linked below. You can make an appointment with me on my Calendly, or send me a text message. I'll include that in the description. Okay. Thanks for listening. And if anything comes up, just feel free to reach out to me or comment in the video below.